Welcome to the coffee shop, everybody. This is your host, the Barista, and in today's video, I am going to show you how to trade stochastic divergences like a pro. And we're going to just really destroy the market with this one for reversals. So make sure you like this video and, of course, subscribe to the channel. And if you want to see where market reversals come from a single indicator, this is the video for you. Let's go. What up, guys, and welcome to the coffee shop. This is your host and barista, and I've got a big piece of news for you. So in today's video, we're going to be trading stochastic divergences like a pro, okay? There have been a lot of videos showing you what divergences are, especially on the stochastic indicator, but we are going to be using the STOCASHI, which is an indicator that I created. I put it out there for free for you guys to use it, and you can add it to your chart. So what I want you to do is I want you to add it to your chart first thing, and I'm going to show you how to set it up, okay? So let's go to your indicators tab, and I want you to type in STOCASHI there. Notice how the word cash is in there. So the STOCASHI plus, right? The reason I put the plus is because there is another one that I created. We're not going to use this one today. We're going to use the STOCASHI plus caffeine crush. The link is up here, okay? The link's up there, and the link is in the description if you can't quite spell it right. So do me a favor, add it to your chart, add it to your favorites, and let's get a move on, right? So add it to your chart. What we're going to do is I'm going to show you the settings real quick, okay? You're going to bust it open, and you're going to go to the K, D, and these two links. You want the 5, 3, 14, and 14. Everything else, you could turn it off except for the candles themselves. Now, that's it. Okay, that's it. Now, this strategy works very well on 5-minute time frame and below. Do not ask me about the other settings. Don't bother, because I'm not going to tell you. I just told you, turn off all the other settings, and this works on 5 minutes and below. Okay, now, so we're already here, you're already set up, and I want you to show you what it is that you're going to be looking for. All right, so let's talk about price action first a little bit, and then I'll show you what you're looking for in in the movement of the stochastic, right? So I think I got two things over here. Yes, I do. Right, so this is going to be a little area of, let me get rid of this for a second. This right here is going to represent the stochastic itself. Okay, you got the sell side, you got the buy side, and you've got the midline. Okay, the closer you are to the top, the stronger your resistance is, and you have a lot of selling going on. The closer you are to the bottom, the stronger support is, and you have a lot of buying taking place. Now, I want you to understand support and resistance. That's what that is. Okay, resistance is up here, support is down there. Now, when you have an uptrend, you are looking for bearish divergences, okay? You want momentum to be lower, but price to be higher. So in an uptrend, you have higher highs and higher lows, right? And that ends up looking like that. So you get higher highs, but the movement of the stochastic does not match, okay? We all know what stochastic divergences look like, and I just want you to be clear of how to trade them. This is gonna show you how to catch a market reversal and when you're supposed to enter. Just because you see a divergence doesn't mean you enter the short trade for a bearish divergence. You need to know at what price and under what condition do you enter the short trade. This is gonna get you there. So what ends up happening here, let me do that. Let me draw this out for you. It's better when I draw it. So if price is moving like this, okay, the stochastic doesn't give you exactly that shape, but we're going to draw something close to it, right? What ends up happening is the stochastic comes down to support side, then it goes to the sell side, then it comes down to the support side again, and it goes to the sell side, right? And it gives you a lower high. So what you end up having on the stochastic is a bearish divergence, okay? You have less momentum to the you have less momentum allowing to go up, which means there's a lot more resistance up here, and price is saying, hey, I haven't caught up yet. So if price hasn't caught up, we need to find out where the inertia is going to allow it to catch up. So once you see this, Let me change the color of this one maybe. There. So once you see this, right, you need to draw yourself a zone. If you've ever watched any of my RSI divergence trading strategies, we're doing the same thing here, but we draw the zone a different way. All right. So draw out your zone. Where was the lowest, not lowest price, but the lowest momentum area? Let's say this is where momentum was at its lowest between these two highs, right? You're just going to go to whatever the low on that price is. Notice how it doesn't have to be the lowest point of price. It just needs to be the lowest point of momentum. You're going to go there on the low of that candle. You're going to start drawing a box and you're going to go to the top of the next high, right? You can draw that out. Now, here's the thing. If you break this high, like let's say if price action comes up and starts going above the high, then you have to nullify this divergence and look for a new move, right? But 9 out of 10, that's not going to happen because this is a very strong move for a reversal that's taking place. So what you need to happen next, once a divergence has been found, okay, divergence has been found, the rest of this price has not played out yet, okay? What you're doing is you're waiting for price to break below this zone and stay below the zone. Price has to exist below whatever that low candle was, not the low, not this lowest one here, okay? It just needs to be the low of momentum, whatever that zone is. Price has to come below that level. And the stochastic, this is important. The stochastic needs to be on the sell side, okay? This is the sell side of the stochastic, of all stochastics, including the Stochashi. All the selling pressures on the top, buying pressures on the bottom. You do not want the stochastic to be anywhere down here, period. Not below zero. It has to be above zero and falling, okay? So price gets below the lowest momentum and the stochastic is now on the sell side. That is your clear indication that you can start looking for shorts or initiate your short trade, okay? And that's it. So we're only looking for bearish divergences in today's video. Now I did have this over here because I was marking something. I wanted you to see how it plays out. Let's go over here. Okay. Now this is a bearish divergence that takes place with the stochastic. Okay. It's a very small one, right? This is a very small, weak one. What the part that I did not tell you is this low that takes place between these highs. So here's the highs, right? Here's the low of momentum. This low has to be below zero. The higher it is above zero, or the closer, like the closer it is, the further away it is from the bottom, the weaker it is, and it will take longer for the divergence to take place. So this low has to be down here below zero. It doesn't have to be at the bottom. It just needs to be below zero. This one is above zero, okay? And you can mark it anyway. It's just going to take longer for the divergence to take place, and it will be a weaker downtrend. The very strong downtrends, very strong ones, is when this low is below zero, okay? And in my drawing, that ends up being like this, right? See, this low is below zero. That would be a strong downtrend that's coming up, okay? This one is a weak downtrend that's coming up. Now, so let's draw this out, okay? Here. And you can already see the divergence has begun, right? It's right there, and you can see right there as well, okay? I'm just gonna look at the low point right there. That's the lowest, that's the lowest Heikin-Ashi candle. Notice how it is not the low price, okay? So I'm gonna take the zone, I'm gonna start at the low of that candle and go to the high that was made, the high of price. Drag that out, okay? Now, I want you to be very, very clear. Watch this, okay? You see the high, price comes down, and you see how the price is still not, right? Price is still not below the zone. Let's go to where price is below the zone. Okay, see that? Price breaks below the zone, don't enter for the short yet. Why? Because the stochastic is on the buy side of itself. It needs to be on the sell side, up here somewhere. So let it play out. Let the stochastic rise. It has to get above zero and start turning down. Now that it's turning down and falling, where is price? You're below that zone. Now you can start taking your shorts. And this is where you start getting your downtrend. Again, this was a weak, right? This was a weak support because it's in the wrong place. Strong support is here. So you don't get that much of a downtrend. It's a nice strong move, it looks like, right? But there are much stronger moves that take place. Much stronger moves that take place, okay? So that's one of them, right? Let's take a look at another one. I think I marked out a couple of them just so you can see how these things work, and also where one fails, right? I think this is the failure one. I'm not sure. Let's find out. So let's get rid of this. Like I said, you need to have a lower high on momentum, a higher high on price, and the lowest point between these two highs has to be below zero. It doesn't have to be at the bottom, but if it is at the bottom, it is a very strong support. If a price trend breaks a very strong support, it is going to move very, very quickly and very far, okay? So you have another one here, right? You see a high and a lower high. You can just take a look at price and say, okay, I've got a high and I actually got a higher high here, okay? So find the lowest point of momentum, right? That's gonna be this price right here. I'm looking at the price. It just happens to be the low of price. Let's say this was the lowest point. Then I would be looking at the low of this candle, not the low of price. Just want to be clear about that. You want the lowest point of momentum between the two highs, right? So lowest point is here. Mark the low. Go to this high, right? And when price gets below this, the stochastic needs to be on the sell side, okay? Has to be on the sell side, okay? Right there, you can see that the stochastic is on the buy side. It doesn't matter that it's falling, it is on the buy side, it's on the bottom. You want the stochastic to be falling from the sell side, right? And this is where you get like I said, this is really far down here. So there's a lot of support at this level. Very dramatic move takes place. Look at the length of this move. Very strong move comes down, okay? And if you want to do one more, I think there's another one. Maybe we could find, ooh, this is a nice one, right? I think this one involves multiple divergences, and I want you to see how this one is played out, okay? So you can see, obviously, that you have there. You got a high here, and you got a nice high over there. But in the process, you made a high, a lower high, which is just barely above zero, okay? And then another lower high, right? Lower from that, and a lower one from that, okay? You can keep connecting these highs until this level is broken. So first, this would have been the lowest point, right? This would have been the lowest point from here to that high. So let's do that. Let's draw this out. Here to that high, right? And what did I say earlier? If price crosses above your zone, the high is nullified. You need to wait for another one. So then you get a new high. Okay, draw it to that zone. Right there, okay? That's the new high, as if price was only this far. Price broke above the zone again. So you're looking for a new high, right? Now you're here. And again, price broke above the zone. Now you want a new high. That's a new high on price. There you go, right? But you're still working off of the lowest point. You want the lowest point of the momentum. So that's no longer here. Now that's here, right? So let's kind of drag that up here. Move this in. This is going to be where you want to take your shorts when price breaks this level and momentum is on a sell side, right? Momentum's on the sell side. So you see momentum is on the buy side. It's on the sell side and falling. Price has not broken through this zone. There, it's broken through the zone and it's still in the sell side. This is where you start taking your shorts right here. That's where you take your short. So that's how you do divergences like a pro using the Stochashi. I hope this is a nice long video. It included a lot of information for you guys. Showed weak ones, strong ones, market reversals, and you can see this was clearly a nice long uptrend, big colossal move to the downside, and it continued the downtrend for a while. Then the uptrend continued again, and you had the bearish divergence at this point. You found the zone, right? You found the zone way ahead of time. Big move down, okay? And then another uptrend, and again, you have another down, what do you call it? Divergence takes place right here after this nice smooth thinning out uptrend, and it gives you another downtrend again. So where you get out, where your take profit is, well, I'll let you guys figure that out. That's your own little strategy for that. And I'm about to bounce. It's time for more coffee at the coffee shop. Peace out, peeps.